Hi, everyone, and welcome to Bitcoin Analysis Beyond the Block for August 2024, brought to you by Ainsley Crypto. My name's Chris, and today we have with us our expert panel, as always, Joe and Isaac. How are you going today, gentlemen?
Pretty good. Looking forward to some
Good.
interesting charts to present today.
We do have
Oh,
interesting charts to present. Joe,
yeah, no, fantastic. Great to be back and yeah, keen to get into it.
uh, it's been an interesting month, hasn't it? We've had
Oh,
really a lot happen in the market. It feels like we've said this the last couple of months, but this was one of those months where really we didn't quite know what to expect. We had a lot of volatility, lots of stuff that I think will be really interesting to talk about. Let's jump straight into it. We follow the same agenda for those who are new every time, where we sort of look first of all at the macroeconomic big picture stuff, then we dig into the Bitcoin market specifically, and then end on some technical analysis. Joe, big picture, talk to us about this month, particularly talk to us about this green dot, something that we've been sort of looking for, and we actually saw it eventuate here against the backdrop of things that might not have lined up with what people were expecting.
yeah, 100%. So it feels like we've been talking about this green dot coming for quite a while, and it's finally eventuated. So in terms of where we are in our macro cycle and being in mid cycle, this is pretty much exactly what we were not only expecting, but what we sort of were hoping would happen in the very near future, as we were talking about it last month. So it we did have the possibility of falling back into maybe like an early cycle, which is effectively not much change from where we are now in terms of asset allocation, but it's just more confirmatory to us that we are still in what we would call a strong economic and liquidity cycle.
And it was particularly interesting for me because we had a big sell off during this month, right? Like we had a lot of volatility, as I was mentioning before. We had that big dip in prices, and it caused a lot of panic. And we'll talk a little bit more about this. Obviously, Isaac, you always bring in, the sentiment, and we can look at all that. But we actually, it was really interesting, the discussions that we were having, all three of us during that time, where we were saying, well, you know what, we're not too concerned about this because we're expecting this big uptick in liquidity. We're expecting this big uptick in growth, and the inflation is looking good. The stuff we'll talk about in a second. So we didn't really panic, did we?
No, we absolutely just we looked at it as an absolute buying opportunity. So based on our framework, with like you said, the economy, the US economy in particular, and global liquidity still looking quite strong, which we'll point out in the next few charts that we're going to go through. When everyone else was calling for another 20-30% dip, we maintain conviction that was absolutely a buying opportunity.
And that was so I felt that was so powerful, the fact that we were confident, that we knew what was going on, and we went, well, hang on, we can look at this objectively. We don't have to jump on the bandwagon of fear. And as we'll look at it, it bounced straight back, certainly. Before we get there, the components that make this up, we talk about growth. Really, it's been a mixed bag this month. It probably fairly consistent with what we've seen the last couple of months, but people are very worried about this blue dot, the manufacturing PMI heading down, but services sort of offset it. We're sort of bouncing in the middle of nowhere. When we look out a bit further, it's a bit choppy still, isn't it?
Yeah, still very choppy, but going forward with our indicators, with particularly liquidity, where liquidity leads markets and markets lead the economy, you'd expect, and we still do expect that to turn up. It's grinding out a bottom at the moment. It has been for a number of months, but as we said last month, they don't just turn on a dime. They're a slow moving train.
And one that was really actually very supportive for everything that we're looking at is inflation, particularly on our leading indicator, is heading much lower. We're now
Yep.
well below that 2% sort of target line. Does that mean we can expect really nothing in the way of interest rate cuts ahead from the Fed?
Well, in terms of the Fed's mandate being employment and inflation, we've been well ahead in terms of the lagging indicator the Fed uses. We've been calling for lower inflation for quite some time, and now the Fed are actually starting to see that, and that's going to give them cover to give their, which is more than likely, there's a 100% chance of them cutting at the next meeting. Either I think it's about 40% being a 50 basis point, and then 60% 25 basis point, which is sort of backed off from the volatility that we had a couple of weeks ago. There's more likely going to be a 50 point. But yeah, at the end of the day, the weaker we don't have the employment data. We don't really show it here, but it's the employment data is starting to tick up to where their threshold would want to be, or it's about to cross it. and their inflation is certainly in line with what we've been thinking for quite a while, being lower. And that's, once, like I said, giving them the cover to do what they need to do in terms of stimulating the economy through cuts.
So everything pretty much lined up on that angle. You mentioned it previously, just before. We talk about global liquidity. Very important for our framework because we believe that drives effectively that macro cycle. We know, like looking at this chart, we can see a long history of global liquidity correlating to world asset prices. So this chart looking at the percentage change that you're experiencing, and you can see high correlation there. We've seen this black line global liquidity heading up. We've talked about this chart a number of times. Just it's up and to the right. It's pretty much it's quite consistent, but over a long period of time. And the issue you have, of course, is the gyrations between periods where it's aggressively moving up, which we would argue we're starting to move into now, and we've seen a little bit, and these periods where it moves down, which cause generally chaos in the markets, particularly for the assets that we're looking at. This is our cycle as it stands at the moment. This was our last move higher. That was that sort of green dot we were talking about. We've experienced a significant tick back up. We were a bit worried previously that we were just bouncing along the bottom. Is this the start of the move that we've been expecting?
Yeah, I think so. Particularly when you look at China, they're a big player in terms of what the liquidity they produce into the global index. That they're starting to stimulate. It's quite in terms of their seasonality. It's lining up perfectly for them. As we just discussed, the Fed are going to start cutting rates as well, and potentially, even with their QE status, it's not been called for or confirmed yet, but they're probably going to start backing off their QT later at the end of the year, as the economy starts to slow. Then you've also got seasonality in terms of the US Treasury reaching closer to the debt ceilings, which means they won't be able to finance themselves. And generally speaking, when that occurs, they can't borrow more money. So what ends up happening is the money in the General Treasury account, the TGA, it's just spent straight into the economy, which is liquidity positive. And they're not taking anything in out of markets through raising capital through bonds. So that's expected to happen, particularly the TGA part we just discussed, through Q4 and into early next year. So it's all looking great. And
it feels so almost satisfying to see that move happen when we've been talking about it for so long. Isaac, I mean, this chart here we talk about every month as well. We're starting to see that green come in, and it really is reinforcing what we've been saying, isn't it?
Yeah, it's looking bright ahead, especially from the liquidity perspective. And even from the stuff I'll cover today too, going ahead, we are expecting to see that push up. But it doesn't have to be immediate. And then even in the charts that Joey's got to show too, we can see that we can consolidate, which we've been saying this in the past videos too, for a decent chunk of time before we start to head up in a large capacity.
Now, we've been looking at this more in depth over the last few months, this idea of the weekly global liquidity. We've obviously zoomed out. That was what we were looking at before, the bigger cycle, but you can also look at it at a weekly level. And Joe, we've been straight up into the right in these last few weeks. It's looking very bullish there. When we overlay, and this has been really my favorite chart of recent weeks, overlay the Bitcoin price at that weekly level. And this blue line, by the way, is just the close price for the week. So this is what it was on Friday of last week. We seem to be seeing a bit of a divergence here. So that would imply to me that one of these lines is wrong. What's your take?
Well, it would be the first time that we've seen that divergence, even if you're just specifically looking at this chart here. So I would expect, knowing that liquidity is going to pick up through the rest of this year and early into next year, that blue line is going to have to play a fair bit of catch up. So whilst it seems it's all doom and gloom, like we'll look at sentiment a bit later on. I've got a chart, and so does Isaac's got a couple of sentiment charts. While the sentiment's quite poor, I'm quite constructive on the price of Bitcoin over the next 4 to 6 months, which we've been saying for quite a while, I understand. But we just got to get through this choppy consolidation period first to get rid of all those sellers. And then once those sellers are gone, then we can start moving up.
And ultimately, I mean, I say it a bit facetiously, but if one of these lines is wrong, it's going to be the Bitcoin price here, because the global liquidity is in the driver's seat. So if that's heading up and continues to do so, particularly at the rate that it has over the last couple of weeks, Bitcoin really has no choice but to play catch up. So As you mentioned, that's looking quite exciting. If I just zoom out and look at the cycle version of that, so this is not the straight raw numbers we saw in the last chart, but the actual cycle that we talked about already. We've had that tick up. Similar story, and I really think Bitcoin has been remarkably strong through this period of uncertainty. Really, I know we see that this is always a debate. You know, you're looking closely at the actual candles, and it's chopping all over the place. But when you zoom out and look at just the average price of the month, it's been very flat.
Yeah, and I think as you look at that run up into March this year, in March the middle of March, whenever it hit the all-time high, that was quite a run up. It takes a long time for the market to digest that amount of profitability, and for sellers who want to sell for that to actually happen. If you look at, for example, on the left over there with COVID, those COVID run ups, it all happened too quickly. There was no consolidation period in that whatsoever, and that's why eventually the run ended up. Well, a lot of people say that run ended prematurely. So whilst people don't like this consolidation, boring sort of low sentiment period of time for Bitcoin's trading, it's an absolute necessary part of what needs to occur before we can move into the next part of the cycle.
And I think it will be really interesting for people who've been following along as we've done this every month to see this chart evolve, because if we do end up at much higher prices, this will all look quite flat. Because remember, this isn't a logarithmic scale. This is a normal, just a normal scale. So if we see some significant price rises and this flattens out a bit, we'll go, yeah, it actually lines up quite
100%.
perfectly, but it looks a little bit disjointed at the moment. I've had some comments on that, but really, when you think about what happens when you make that logarithmic, it's very interesting. All right, so that's sort of covered our big picture macro, where we are in the cycle type of stuff. Joe, this is an area that you tend to focus on mostly, the Bitcoin market analysis. Sorry, Isaac, this is a section you tend to focus on, the Bitcoin market analysis. I'll just repeat myself there. You've talked to us about this chart a number of times, and has something changed here when we've experienced that pullback, that sell-off that we saw? Does that change this underlying dynamic that we see in your market value, realized value chart?
The underlying, it doesn't change anything underlying, but what it does do is it lowers the MVRV score, which we've seen. We've been seeing that the whole range. We've been consolidating for a solid amount of months, right? And whilst we've been doing that, we've been raising the average cost basis, and what that does is it lowers the deviation score, which is the Z score. We've been seeing that, and I've also been saying this to the past videos too. It's looking awfully similar to the 2007, the last run we had before. So if you can see there, we had that rise up, and then we've started to trend down. So we're consolidating for a good chunk of time before we then had that sort of exponential growth. So obviously the timing's a bit different, right? So that was pre-halvening at that phase. We're now post-halvening where we are now. So, history rhymes, but doesn't repeat exactly. So we could be seeing that sort of event where we start to cool down on the deviation score there before we see that rise up. And look, we've been saying this for the past few months, yes, but looking from the macro perspective, we are expecting the liquidity increase, and we know that's a leading driver. So one would expect this to start to rise up, and that the Z score to start to increase as we start to see a more aggressive push up, opposed to just we're just slowly consolidating on a horizontal basis. But the more we do that, I guess the more it just lowers our Z score. But typically in the bull runs in the latter half, we start to see that more exponential growth, which then makes that score rise right up, which is going to be a signal we're going to be looking at to sort of time the top, I guess.
It makes a lot of sense. You dig into that from a different angle when you talk about fear and greed, and this is something we've come back to every month. Is the flush out obvious here? Can we see what happened during that sort of real panic stations in the fear and greed data?
I feel like the flush outs on a visual basis, like on this chart here, it doesn't look that dramatic. So obviously we had the COVID situation, the last one, which really took a big hit in the candles, and you can see the fear and greed went really low. But with the Japan stuff that's just occurred, we did hit quite low in the index, and in the moment it felt, you could feel it, right? You went on Twitter, you could feel everyone's just like, no, this is it. The market's dying. It's always like this. and reverse. So before that one, we had the Mount Gox and the Germany stuff, which we were also talking about. Oh, this could be the low, right? And then we had this one, which sort of triggered a massive sell-off in the S&P. And then that also came through in the Bitcoin price. And it took out the 52K liquidity zone I've been speaking about, which we'll go into later. But yeah, in terms of a reset and sentiment, I think this is an adequate flush, but I'm not going to speak too soon. But I think what we had is quite a dramatic flush, and you can see it on the index. It's just funny. You can see how it went up and then down again, and up and down. So,
and
this
index here. This is a bit of a shorter term, zoomed in view, isn't it?
Yeah, this one's very short term. We've gone over this one a fair bit, but as of now, as of last night when I made this, when I screenshotted this, we're sitting in a neutral stance, which we tend to, and all the other metrics I'm pointing at right now from a short-term perspective are speaking towards a more neutral stance, potentially going in towards the 60-day cycle. And we're also in a very tricky situation between the cycles and where we are right now, but we'll go into that in a few charts.
So Google here, we've got a bit of a apparent tick up in interest. What would be driving that?
I think what's driving this specific one is probably the fact that, the market tanked, when we had the Japan stuff. And people probably looking at what happened. I had mates text me and say, oh, look, what's happened with the price? It's just, especially Ethereum took a really big hit. So I think that one was possibly on the background of what we saw with the market. But, it could be more retail interest starting to pick up. But I think it's too early to call what that is, but I think it's apparent we do have a tick up and the trends are projecting that. So, yeah.
Right. And so the last bit on this section, the active addresses. Now, you've talked about this for a few months now, not necessarily something you can do technical analysis on, and you're not really doing that here, but is there a bit of a low there? Are we starting to see them tick up, and does that indicate more interest? How do you view this?
This one's an interesting sort of metric I'm looking at. I'm not really looking at it from a technical perspective, but I did draw that line sort of as an observation to see where we've found, support in terms of an active addresses bottom on a numerical value. You can see that on the left-hand side. But, I think potentially just from that perspective, you can see we have sort of formed the bottom and we could potentially be heading back up if you were to view it as some sort of channel. But because it is active addresses, I don't know. I haven't really seen many people look at this thing and then try and chart it, because you probably wouldn't do that normally. But it's just something to look at, because you can see when we hit market tops, we start to see that aggressive growth going into that. And it's pretty apparent now we're not experiencing that, right? So I think we can all collectively agree on that. So then that's another thing to say, the top's probably not in, and even on the macro perspective too. So, yeah.
Yeah, and all of that together, like as you point out, it's adding all the pieces together of the puzzle. We don't necessarily rely on any particular one.
Yeah, exactly.
This monthly Bitcoin analysis is brought to you by the Ainsley Group, Australia's trusted choice to buy, sell, and swap gold, silver, platinum, and crypto online or in our Brisbane and Melbourne showrooms. With over 50 years of operation, we're your reliable partner in wealth management. If you're looking to buy tokenized gold or silver anywhere in the world, check out the Gold and Silver Standard, the security of real-world precious metals combined with the flexibility of blockchain. Not Isaac, but Joe, we'll go over to you now. You have been looking at this consistently since the ETFs, this idea of money flowing in and out. Have we seen, well, probably the same question to you. Have we seen what happened over the last couple of weeks with that big sell-off reflect in the ETF numbers?
Yeah, so there's been I would say a fall in accumulation. It's basically just been flat over the last few weeks. So we're just sitting under about 300,000 Bitcoin accumulated, which in itself is a massive number. Like, you think 300,000 Bitcoin accumulated by ETFs. So you certainly can't understate that. In one of our reports a couple of months ago, we said that we don't think that the ETF, in terms of the accumulation ETFs will really explode until we get past that all-time high again. We're chopping around. There's a little bit of uncertainty. There's still a little bit of that cash and carry trade going on. So there's Bitcoin moving in, Bitcoin moving out, trying to capture that premium, which we spoke about a couple of episodes ago. So yeah, I would expect this to basically stay flat until we get a little bit of that retail and maybe a little bit of institutional FOMO as we break all-time highs. So yeah, no there's no surprises there from me.
So we'll continue to monitor it,
Yep.
but I would, my take on it from what you've sort of shown and when we've discussed it is, it certainly didn't see a massive outflow. Like it might be fairly flat, but it wasn't a wholesale panic.
No, not particularly when what was it, a 20% drop in less than a week, and so we didn't see huge outflows from the ETF. So it wasn't investor panic, that's for sure, from that end.
Now let's look a little bit. This is something I know you've been paying quite a bit of attention to, at the underlying driver of what caused that drop, and that was what's referred to as the unwinding of the Japanese yen carry trade.
Yep.
Probably a lot of complexity in that for people who aren't really familiar with it. Can you step us through a little bit of what happened? Because I know you brought some charts here as well to show us what was going on at the time in the crypto markets, in the Bitcoin market in particular.
Yeah, so I'll quickly start with what caused it. We can all make assumptions of what caused it, but the market would tell you that the Bank of Japan basically raised rates from a very low 0.1% to 0.25%, which, when you're looking at interest rate differentials, obviously the higher a currency has, the more desirable it is to own. So what you've got there is that line goes up, that's the yen weakening against the US dollar. So the yen is what they would call a funding currency. So because the interest rates on the yen have been so low for so long, people in the US or investors, or even investors within Japan, would borrow yen at effectively zero and go buy assets that would give a yield, or even say you could go buy a treasury bond, for example, and earn 5%, or you go buy the Nasdaq or stocks or even Bitcoin and earn a substantially better return than 0%, which is what you're being charged on the money you own. So when Bank of Japan came out and all of a sudden they decided to lift their interest rates, we had a flow of capital. It's more of a scare of the market. So it ends up like a snowball effect. So once that money starts to move back, and that line drops, that's the yen strengthening against the US dollar. So all of a sudden, as it gets stronger and stronger, more and more margin calls. There's more and more margin calls, and people have to bring their US dollar denominated assets back in Japan, which caused it to drop even further as the US dollar is sold and the yen's bought. So that a lot of that happened on not last Monday, the Monday before, during Japanese trading hours, but in the US, for example, the markets weren't open. It was still Sunday night. So when that sort of stuff happens, when you get margin called, you basically just sell whatever you can sell. And for a lot of investors, that was Bitcoin. So once that ball starts rolling and you start getting those liquidations, that's how we quickly went from, say, I think it was around 60,000 on the Saturday, our time, and then by Monday afternoon we're down to 48. So yeah, that's investors not wanting to sell. That's investors needing to sell.
And I'd just like to point out my perspective on this chart. It's not even that this is such a large move. It certainly is a significant move. It's probably the size of the move in the relative time space that causes the problems. It's not, that's what you would probably call a fairly disorderly unwinding, where if it takes us time over many months to go in a direction, the market can adapt, but it can't really adapt when it happens quite suddenly. And that really was the pressure that we saw, I think, building up.
Yeah, and 100%. And what this chart's not showing, so this chart's only showing about a year. This trade's been going on for a number of years, and the yen was certainly a lot lower than the 145 that you're seeing on the left of the screen there. It was, I'd have to look it up, but it was low hundreds even.
So it's been a long,
which breeds complacency. So when it does eventually turn, all that hot money that's just decided to come into the game, that is particularly leveraged, they quickly get unwound.
And you brought along this chart. This isn't the current chart at all, but this is what was happening at the time. Yeah,
this was just a screen grab that I managed to take when it was all happening, and it was a couple of hours after it happened. But so it was basically below levels of when the FTX debacle occurred. So that was pretty significant, and if we're reaching those levels, then we're still sitting at 50,000 or 55,000 on the bounce when I think I took this. So it's not like it was really that bad, but man, there was a lot of fear.
There was a lot of fear, and it accumulated very quickly. It felt like people were a little bit shell shocked and still recovering from the FTX sort of event because we haven't
Yeah.
seen something quite like that since then.
Yep.
This was happening around that time as well. Do you want to highlight or talk us through what's going on here?
Yeah, so this is just holders, addresses that are accumulating Bitcoin based on the 30-day change. So as that line goes up, they're accumulating at a faster rate, and as it drops, it means they've stopped accumulating effectively. So this was at around that time that the Japanese yen unwind was happening. So I imagine it's quite lower. It's a lot lower at the moment, but it just goes to show that the permanent holders or holders who are there to hold on to their Bitcoin for a very long time were stepping in and accumulating this significant amount.
Yep. Right. So
while others were forced to sell or
that could be quite a powerful sign when you think about it, because that's saying their conviction, but the longer term holders, their conviction was very high.
Yeah, and it doesn't necessarily mean that's a bottom or we're going to explode to the upside straight away. It just means that it's Bitcoin that's not very unlikely to hit the market anytime soon.
So it's a strong hands argument where it went from the weak to the strong during that event, which does make sense. You bought this chart as well, and I absolutely love this one. You've been talking about this in different ways. I really just like the way this visualizes it. Here's where we are, and here's potentially where we're going. Talk us through it.
So it's just applying some perspective once again. Breaking into the 4 years, we've got our bust early, mid, and late cycle back on our macro chart. This is effectively the same thing, but in terms of the Bitcoin cycles. It just goes to show there's nothing abnormal about what we're going through now in terms of the chop sideways and the price action, and that we also have a long way to go, well into 2025, which aligns nicely with where we once again see liquidity going into the next year and where the macro regime's going.
Excellent. Exciting news to know that all these things are aligning so far, until we now speak to Isaac, who often likes to cut us down in our prime when we get all excited about this stuff, Joe, when he talks to us about the technical analysis. And, to his credit, he's been very consistently right on the shorter term, at least. We'll still
100%.
claim that longer term that we're on the right side of this. But Isaac, talk us through, first of all, this cycle move that we've seen. How's it lining up with what your expectations were?
Yeah. So before you do that, I think the chart that Joey just showed us before ties in well with this chart, just showing that, we can experience, we're in the second bull phase right now, right? So we can experience that sort of consolidation phase, which I've also been speaking about in previous videos. And right now we are experiencing it. So in the last cycle, we saw, consolidation for a good few months. Before that, large run up. And in the previous cycle before that, similar sort of thing. The interesting thing about the last cycle is we had those, the double top situation before it finally reached that, the peak later on. But where we are right now, consolidation is what we're sort of expecting for a little bit longer until we see the macro regime start to pick up, which already are, to give credit to you. We're starting to see that tick up. But in terms of starting to see those large increases, what you do typically see and expect, we should be seeing that, towards the end of this year is what I'm personally expecting. And even from a technical perspective, I think that's pretty grounded.
And I suppose in both what Joey just said then and what you've just shown us here, you've got a little bit of a target there, but that doesn't necessarily mean that's exactly how it's going to unfold. That's our best guess.
I mean, every cycle we've had, sort of that green zone has been a zone where you think, okay, this is the time where we start to reverse, and we've got to be looking at our macro situation to see, okay, what's going on here, and what are the other metrics saying? Do we need to flip our bias? And obviously, right now it'd be silly to flip your bias because we're pre-bull essentially, like we haven't hit that massive sort of rise up. So you would not be flipping your bias right now, especially considering what we have in the background.
And you've got a couple of these. We look at these RSIs or the metrics that you're using down here to sort of indicate where we are at the weekly level, daily level. Weekly level looks pretty flat.
Yeah, an interesting observation I've had here is we're sort of like the bands are sort of tightening up in terms of the flips. So we could be seeing some sort of contraction while, where we start to obviously, how price, it's almost like a pattern, right? It closes in before it hits the end of the triangle and it bursts up. So we could be seeing some sort of situation like that where price is just, you can't consolidate forever, right? We all know that.
Yes.
So it's going to have to pick one side eventually. And it's looking like it's going to be the upside, even from the timing perspective and everything.
Well, even this is looking a bit closer, I'm assuming.
Yeah, this is looking close. I'm on the 3-day. from a, yeah, I mean, right now we're sort of consolidating mid right in that little channel. So usually I have a stance in terms of I'm expecting up or down. For this specific update today, I'm more so leaning neutral. I'm not really holding any particular stance, particularly because of where we are in the 60-day cycle. And we had that premature low that came in with the Japan situation. So it puts it in a tricky situation where I honestly think it's too hard to predict on the short term where we're going to be heading. But we have taken out that big liquidity zone, which I've been speaking about. So that offers a large support down there. So I personally wouldn't be expecting that to break. But we could certainly see a fake out flush down there to sort of wipe the final hands while we go into the 60-day cycle low, if we do sort of fulfill a normal one, opposed to what we've had, which is 30 days.
Well, Joe, he's not giving us straight negative, so we're going to take that as a positive. I'm quite sure. The daily here, I'm assuming you'll say, we'll take what we can get. I'm assuming you'll say the same sort of thing here, that it's really indecisive, but we are sort of in the middle of it.
I'm just going to be honest. The charts are just incredibly indecisive right now, and I can't pick a side right now. So yeah, indecision is what I'm going to stick with.
So in that sense, up is the side we're going to pick. The 60-day cycles, we've looked at this quite a bit. Really, I mean, that has done some potential damage to where this cycle ends. It'll be a bit of a funny one wherever the end of that is, but is that giving us a bit of an indication that we've still potentially got a little bit longer to kind of, to your point, to sideways to down?
Potentially. And I was even looking at Bob, and he was sort of pointing towards a similar thing where we could consolidate a bit longer until we hit that time frame. And again, it has done a bit of damage having that premature cycle low, if that is the cycle low for this one. But it's tricky situation, so I can't really say too much about it. But we do have that 60-day cycle if we are to hit one, so we could sort of consolidate / head a bit lower before we go into that.
Now, the volume and the other one I'll show a bit later, the profiles where you sort of give us what the market or where the orders are placed and how the market is situating itself. They've been ones that I've been learning a lot from as you presented this over the last few months, because they have been quite good indicators of telling us where the targets are. Yeah. What's going on here?
Well, firstly, this metric just sort of shows you where the supply and demand is, right? So that's what those value area lows are, value area highs in terms of a volume perspective. And we also have that 80% rule, which played out. So the last video we did, I believe we were at that last low. So it was the Mt. Gox sort of situation with the Germany. And we were at the value area low. And I remember specifically saying, if we start to claim that value area low, there's an 80% chance we'll reach the value area high, which we did. We then found subsequent resistance there. And then obviously we had the cycle top there from the daily perspective. We've now capitulated, taken out the 52K region, which is the liquidity zone I've been looking at. And now we've found a resistance at the value area low of the channel. Now, I remember Joey asking me this and saying, where's resistance? And I was pointing towards this level around the 60K region, give or take, right? It's gone up a few more thousand more than that. But that was around the value area low. And right now we're finding that resistance there. So we're trading beneath it. Tricky situation. Again, I can't really pinpoint now because you would like to see it to claim into it pretty easily. But especially, again, the cycle hasn't played out fully in terms of the daily cycles. So indecision, again, I can't point to what's going to happen for this specific.
And I get the point too, that it becomes harder when you wipe out a whole lot of participants, as that move did, because it removes a little bit of the certainty. Not that everything is certain in technical analysis like this, but you sort of have more certainty when there's more players to and fro at certain levels. It makes it clearer. Maybe the answer, and that's what you've brought along here today, is to look at other markets to try and get a bit of a sign of what's going on. This is a comparison with the S&P 500. It's really quite fascinating what happened. And that's certainly a market that had a lot more participants in it than what the Bitcoin market would have had. Talk us through that.
Yeah, I just want to point out this one. The S&P 500 recovered, well, I think a lot faster than anyone anticipated. It's a V-shaped recovery. And, at those lows, we all felt the pain and even the sentiment, and as you can see, and all the, Twitter and everything. So, and just look at it just like that. In a few like week or two, we've rebounded dramatically. Bitcoin hasn't quite done the exact same in terms of how sharp it's been, but nonetheless, it has recovered a fair bit of ground. So, I personally expect Bitcoin to play catch up. for the S&P, it tends to, even though they don't follow each other exactly, they sort of tend to follow the general direction. And if the S&P is going to be leading upwards and higher, you'd be expecting the same thing to see on Bitcoin. So that's what I'm personally expecting.
And the volatility index, I'll get your perspective on this, and I'll also ask you, Joe. So prepare for that. Volatility is something we've been paying quite a bit of attention to. This idea that it's really been very compressed over a long period of time. And looking at sort of this chart, you can see it has been quite low. Big spike, but we're back down again.
Yeah, that's the interesting thing. Like you can see with the COVID situation, it was more prolonged fear, right? So we end up closing those higher volatility levels. But this one was quite a short sort of recovery, which came back down. That also makes sense with how the stock market's been acting, with the V-shaped recovery. But yeah, I mean, I just sort of put this chart in just to point it out. I don't really have a particular opinion. I don't really know what to make of it. So I'm just to see what Joey's going to say. But yeah, just an interesting observation. You know, around that halvening period, there's a spike on, you know, even the last cycle.
Joe, you've talked to me a fair bit about this idea of compression in volatility that seems to have been happening for a number of years now, really. But what's your interpretation of this?
So we'll point out first of all that the VIX is the volatility metric of the S&P, and generally speaking, as Isaac pointed out before, you generally see, if you're seeing large sell-offs in the S&P, you'll see large sell-offs in Bitcoin, which is why you're seeing somewhat of a correlation there as well. Large volatility is generally related to drops. It's escalator up, elevator down. That's usually when you get the large volatility, and it can almost be read, the VIX as basically a fear meter, because it usually only occurs when there's large sell-offs and all the liquidities drop, like the market makers disappear, and you just get the limit down. So in terms of that volatility returning to what it is, so we've had a lot of suppressed volatility. So a lot of market makers and hedge funds selling volatility, so just selling options and basically collecting a little premium. But as you can see, a lot of them probably got wiped out in that large spike. And it hasn't taken long for them to start selling it again and bring that volatility right back down. So it's potentially, you know, you're looking at the yen stabilizing. That's potentially the end of the move, because it was quite a reasonable move in terms of volatility. The only time we'd seen much larger ones were COVID and the GFC. That's really only when we'd seen higher points of volatility than what we've got there. So it was a reasonably large move, but you know, as that starts to smooth out again, participants start to return to the market, and complacency starts to set in, and that can occur for quite a long period of time as the market grinds higher.
I mean, if you were asleep for the last month and you're awake when we did the last update, and now, you know, you slept through the rest of it, and now you wouldn't really know that anything had even happened like that. It does fascinate me how quickly this has returned, because for how much fear there was, that it all just evaporated, and this is a very good indicator of that. It really, the timing really blows my mind, really.
Yeah, well, what happened as well, once the you know, when we had that vol spike, the Nikkei, the Japanese stock market, dropped 12 or 13% in the day. I think went limit down. They had to stop it. So they ended up having it wasn't the head of the Japanese central bank. It was the deputy governor, Yoshida. He come out and said, no, we're not even, once that occurred, we're not going to raise rates anymore. We're just going to leave them where they are. So keep it at 0.25 for a little bit longer. And I think that sort of calmed the market nerves, and that's why we're seeing a big retrace in volatility.
Very interesting, and it kind of proves a thing we've talked about for quite a while, that, you know, when if anything really does become problematic, they're very quick to step in and fix it. We saw that in the UK. We have Liz Truss and her head of lettuce challenge, where, you know, very quickly, once it all's falling apart, that they just come in and reverse course, and we've seen that again, and it's quite spectacular to see it on chart form. Another factor that plays in here, and I probably will get both your perspectives on this, but I'll start with you, Isaac. The US dollar, we've seen it respond quite interestingly. There's I wouldn't say controversy, but there's a little bit of conspiracy, a little bit of debate maybe about whether this is all being tried. The Japanese situation is a little bit of a escape valve for the US dollar, that we've seen other factors at play really trying to push the US dollar lower potentially, that coming into play.
Mm.
Isaac, what are you showing on this chart first of all, and then Joe, I'll cut to you on that.
I think for me, from a technical perspective, the key point is obviously when we are in a bull market phase, the DXY, which is the US dollar strength, is either in a consolidation or it's sort of downtrending. And then obviously when the bear market sort of comes along, we're sort of rising the DXY. So it's like that relationship's important to note, right? So where we are now, I guess it's pretty clear we're sort of consolidating. You can see that. And and I remember you saying, you're sort of bearish on the DXY, and it's hard to sort of chart that out, but I think the DXY is more a macro play in terms of understanding how the strength of that's going to be. But what we're seeing now is more consolidation. But yeah, a key to note is when the top is likely to be coming in, we should start to see this start to rise. So that's going to be something to keep an eye on, in my opinion.
Joe, is it heading down?
Yeah, well, so we've spoken a bit about it in our macro video, the other one we did with Paul. In terms of like I was actually, I don't want to get all smug about it, but I was calling for it to go down. We're still based on bond yields. So bond yields were sitting around 5%, and for those who aren't aware, there's a very tight correlation between bond yields, the dollar, and obviously the direction of the DXY. So as I think that it's not just the US government, it's also other governments and central banks that want a lower US dollar, so they can stimulate their economies by printing their own money. So they can't go out and stimulate their own economies like, say, China, Japan, Europe. They can't go start printing money when the US dollar is so strong, because it will strengthen the dollar even more against their own. So I would say that they're all working in cahoots with each other to actually lower the dollar so they can all stimulate. And it might just be some sort of agreement when you got to buy our bonds or whatever it ends up being, or we'll give you some swap lines or whatever it ends up being. But yeah, I think that we're heading lower on that, and bond yields are telling us that too.
Isaac, you brought a really interesting chart here, just a really long-term trend line. Talk us through that one.
Yeah, this one I just saw on Twitter, and I just thought it'd be an interesting curveball to throw at you guys. It's a logarithmic chart, and it's just got this macro trend line, as you can see there, which is often support and resistance. So where we are right now, we're the candle is literally on the line. So I guess let's do the support, guys.
Is that really why? Like, if you look at that being on the line, is that part of what makes this indecisive? Because that's as pretty much indecisive as you can get if it's right on the line.
Exactly, it is, and let's view it as a bear trap. Let's do that. Yeah, it's just one of those charts that it might just be nothing. It might just be a coincidence, but it's just an interesting chart to look at. How you can see how many touches we've had on it.
We always do love an interesting chart, but this one is probably my favorite, and you've talked about this before. It's becoming my favorite every month because it just becomes so clear where those targets are. Talk us through this one specifically. Here, you were talking about this for a long time. All cleared out now.
Absolutely, it's all cleared out, and Joey had beef with me, but we've cleared it out finally.
I was not skeptical. I was nervous because it hadn't done what you said it was going to do.
Yeah, but I've obviously since the time's gone by, I've had to zoom the chart out. So before I used to do the 6 months, so obviously it's more zoomed out, and the colors are a bit different because we're looking at the shorter time frames. But you can see here, 52K was a very big region, which we've subsequently taken out. Very strong support there. We also had support levels there from just daily levels, weekly levels, and even volume. Yeah, and what we've seen is a massive bounce all the way back up to around that. What did we hit? It was like 60 something. But where we are now, we're in that indecision phase right now, and we've also got the liquidity above.
Because these lines are these the next target then?
Yeah, that would be the next target. I can't really see anything on the downside that would be attractive to hit, especially having such a large capitulation low with what we had. And in terms of what other black swan events we have on the horizon, it's hard to pinpoint what we're going to have, right? No one can really do that. But the target would be that next little zone up there. I'd have to zoom in a bit more to get the exact pinpoint, which I will do in the article I will write for the week. But that's going to be the next target ahead.
So all I heard, Joe, was he's definitely heading up here to these lines. So Isaac's done his job and told us what we wanted to hear. So
All I
appreciate-
heard was it was going to obliterate that yellow line.
that's it. That's what I heard as well. So yeah, we must between us, we must be right.
Yeah, must
Look,
be.
we've come to the end of all that analysis as we do each month. Once again, we've got hopefully a little bit more clarity. Final thoughts, closing thoughts. Isaac, I'll start with you. What's your key takeaways that you want to leave everyone with?
Key takeaways. So macro perspective is looking solid. You know, we're starting to see global liquidity rise up at a faster pace than what we've been seeing the previous months. Especially with the dot coming up, which we've been looking at. In terms of the technical side on the quite short term, I'm not quite sold on where we're going to be heading yet. I can't really form an opinion like I usually do. So just indecision from me on that side, but nonetheless looking solid for the more long term. Yeah.
Joe?
Yeah, I'm actually quite happy that we did hit that $50,000 low, and the people that wanted to sell or had to sell have sold, in my opinion. As Isaac's been saying, in terms of other risk assets that are also led by liquidity, like the S&P and the Nasdaq, they're all going tick for tick. So I do expect Bitcoin, as I've been saying for a while, but I do expect Bitcoin, once we get through this consolidation period, to really catch up.
And I think that's my thoughts as well. The idea that it takes longer than we'd like to think. We look at a chart and we go, oh, look, it's heading up, but we forget that the chart might be, that far might be 6 months, and 6 months is a really long time when you're living it in real time. But it was very exciting for me to see that really we were starting to move, everything's starting to move in that right direction. I do take on board Isaac's points that, we have to be a little bit more patient yet, because all of the charts he presented there, we're not really in that zone yet where it just takes off. But you certainly wouldn't want to be positioned to the downside, because there's nothing saying that it doesn't come a bit earlier, particularly on the back of what we're seeing with that real push up in liquidity at the moment. So I think overall, very happy to continue waiting, but like the little bit of the little boost of optimism we had, and the response, just how it responded to that sell-off, I think is all you really need to know, that you shouldn't be part of those. A number of those people are still on the negative side of the sentiment, because I mean that's very bullish in my opinion, that it just really brushed off quite significant falls.
Yeah,
100%.
All right. Well, thank you very much, both of you, for all your efforts on that again for this month. Really appreciate all your time and work on that. Thanks everyone for watching, and we'll chat again soon.
See you later. Bye.
See you next month.